Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Steve Saretsky. He's a Vancouver-based realtor, online at SteveSaretsky.com, on Twitter at Steve Saretsky. Welcome back to the show, Steve.
Looking forward to it. Thanks for having me on.
Steve, has the latest issue of the Saretsky report been released yet?
Yeah. We every month there, it came out about a week and a half ago. So we've got the up-to-date data for the end of October there, and obviously sort of a continuation here through almost the end of November now. So we're still rolling along.
So what's the latest on the Metro Vancouver housing market?
It's pretty much a continuation of what we saw in September, October, which is basically you've got the sort of, it's all about like specific price points, right, in segments of the market. So what we're seeing basically is any sort of entry-level product, whether that's an entry-level condo, entry-level townhouse, entry-level single-family detached house, that's where really all the price pressure and competition is. So, single-family housing market, less than 2 months of supply, fewest number of new listings for the month of October in 20 years. So that market's really just starved with inventory. And so, what you're seeing is basically buyers are really just fighting over like the very few inventory or listings that come to market. And so what's happening is you're seeing another escalation higher in prices, which is kind of hard to believe. And then, you've got like entry-level condos, which are obviously competitive with first-time home buyers and with investors as well. So, like I said, depends on segment of the market. Now, again, if you're in the luxury market, if you're looking for a detached house over $3.5-4 million, it's a relatively balanced market. The prices aren't really ramping up much there, so it's a little bit different than obviously 2016. In our last bull market.
Mm-hmm. What's the latest on supply and demand?
Well, I think we just kind of nailed it there. The demand is still strong. It's seasonally we're going to start to slow down here from a demand side. We're not. If you look at sales, though, they're still running well above 10-year historical averages. Nationally this year for 2021, nationally this will be an all-time record high for home sales, which will actually beat 2020's previous record high. So, back-to-back years of record housing volume, across the Canadian housing landscape. I think it's right to believe that, this won't last forever, and it's probably, I think, will likely endure a bit of a pullback next year. I think that seems logical, but let's wait and see.
Are some sellers still waiting for COVID to end before listing their properties?
Not really. If you look at condo new listings, for example, probably 6 out of the 10, 11 months so far this year, they've been running at basically close to record highs. So I don't really think it's a situation of people like being afraid of COVID. That was the case for 2 months at the onset of the pandemic, and then everybody sort of figured it out. So, that hasn't really been a driving factor. I think what we do see is people that, okay, maybe you want to sell your house or whatever, or you want to upsize from your condo, that sort of thing. What we are seeing is people are, they're looking at it and saying, okay, well, I want to make a move. I want to transition. I want to go somewhere else, somewhere different type of product. And then you go and you look at the inventory online to see what you can buy, and everybody's going, well, there's really nothing for me to buy, so why would I sell? So there's some hesitation there. I think that it's making people's decisions or transitions much more challenging, right? I think so. There's a lot of people that are getting discouraged and opting to hold put, and maybe that's partially responsible for the 20-year low in new listings in the single-family market. I think there's a thing. I think right now is still at play is ultimately there's still a majority of people are still working from home in an increasing capacity. And so, is it the best time for you to downsize from your detached house into, a 2-bedroom condo? Like, it's not overly enticing for a lot of people. So, we're still seeing, again, demand for that detached townhouse or detached, single family.
In October, November, are properties still selling significantly over asking price?
Yeah, the bidding wars have definitely ramped up. So what we saw, if anyone's familiar, like March, April, May of last year, everybody knows how frenzied that market was. Of course, we slowed down June, July, August. We saw bidding wars really slow down. And then it really kind of picked back up in September, October, and here in November. And that's basically just a case of buyers coming back after vacation and whatnot, and just not enough listings hitting the market. And so, yeah, right now when you've got standing inventory, I should add that standing inventory across the greater Vancouver housing market, as of the end of October is at 10-year lows. So when you got standing inventory at 10-year lows, and you got a market that's still very active, people looking to make transactions, you end up in bidding wars, and that's definitely what we're seeing. That's, like I said, that's responsible for the most recent leg up, that started in September.
Some high-end properties are continuing to sell late into the year. Is that normal?
I mean, the high-end market, it's, like I said, at the beginning of the show, I mean, it's okay. It's, it's not hot. Yeah, sure, you've seen the odd high-end luxury housing piece move, but for the most part, I mean, if you bought a luxury property, $4, $5, $6 million property, in 2016, you're probably still underwater. So, that segment of the market hasn't really moved, despite the bull market across the rest of the housing market. So, like I said, depends what you're buying, depends what you're looking at. It's an interesting market today.
Do inflation and interest rates look like they're going to trend higher?
Again, my personal view is I relish in the fact that people love to get angry and disagree with me, but I think that the rate of interest rates aren't able or are not willing to be able to reflect the current levels of inflation. I think that it's being manipulated by central banks. I think that there's zero level of society that can tolerate and withstand meaningfully higher interest rates. And I think that's why we're seeing, inflation running at 4.5% to 5%, and really, not a whole lot of movement in the bond market. I mean, again, at the end of the day, if you saw it today, sell off in the stock market, yields down, close to 15 basis points on the Canada 5-year mortgage, on the Canada 5-year bond, right? So, at the end of the day, it's a global economy that's levered 4-to-1, and as soon as interest rates start to rise, asset prices sell off, and then conversely, bond yields start to fall. So that's my personal opinion. I think that at the end of the day, we've got too much debt, and central banks and governments, despite what they tell you in the mainstream media and what they try to portray, I think they know that they're screwed, and the only way is to basically default in real terms, which is keep basically inflation high and to keep the level of interest rate low. So we're running real negative interest rates. So if you're looking at mortgage, you're basically borrowing at a real interest rate on your mortgage. It's about negative 2.5% to 3% right now. Right? I mean, you can get a variable rate mortgage at 1.2. I mean, if inflation's at 4.7, it's pretty easy for someone to do the math.
Inflation, interest rates, and real estate, can they all go higher at the same time?
I mean, I think, it depends how you look at it. I mean, there's so many different outcomes, right? I mean, there's so many different scenarios. I mean, my view is it's not a hyperinflation scenario. My view is that we're going to have probably more persistent inflation. I don't really think it's transitory, despite the central banks are trying to tell everybody. And so I think we're going to have, a period of persistently higher than normal inflation. And I don't think interest rates will necessarily reflect that. No, again, don't get me wrong. Can the Bank of Canada, will they try and raise rates, 25, 50, 75 basis points? Yeah, I won't fight that narrative, but I think the ultimate scenario here is that, unless we're looking at an outright default, I think that we have to have a situation where interest rates must remain in real negative territory. So you have to have real negative interest rates for, my guess is probably another decade. At least people smarter than me seem to have run the math. At the end of the day, it's just math, right? If you've got so much debt, you've got GDP at X, debt, GDP, it's just math. So, that's kind of my view, right? I think that, at the end of the day, it's a solvency problem. And I look at it and say, who is the biggest borrower in Canada? Well, it's the federal government. And the central bank, the Bank of Canada has a monetary policy framework that's coming up for renewal, as it does every 5 years. And that mandate is going to be set by Chrystia Freeland, the finance minister. She is not known for being a frugal person. She has very large ambitions to spend. She has these social programs that she wants to enact. That's why she was brought in, and Bill Morneau was let go. And so she will tweak central bank policy to suggest they're independent, I think, is ridiculous. And so basically the Bank of Canada, as they have been, they'll continue to fund the budget deficit. And so we're going to likely see, if you're going to have an inflation targeting, is my guess. You have inflation averaging, basically. You'll have inflation averaging, which is different than a 1% to 3% control range. So you'll be allowed to let inflation run hot. You will have a full employment mandate, which will be new. And you'll probably also have a climate change policy, which again is pretty much just an excuse for them to, fund new spending, right? I mean, it's for the role of fighting climate change. And if you agree with that, I mean, what kind of terrible person are you? So what happens is they are able to run, massive deficit programs in the name of climate change, and those will ultimately be sold off in what's called green bonds, and those green bonds will probably be bought by the central bank.
The Bank of Canada ended quantitative easing money printing. How and when is this likely to affect the real estate market?
I really don't think it will. I think at the end of the day, Canada's just this little peon of a central bank. Really what matters is you look at the Fed, the ECB, the Bank of Japan. I mean, those are really your three largest central banks. You could throw in the Bank of England in there. And so as long as those central banks continue to have their foot on the accelerator in terms of, how much QE they're doing. Now they're talking about tapering. I think those are the central banks that matter. Canada's $5 billion a month. Yeah, sure, it definitely helps move liquidity, but at the end of the day, the Fed is really the driver here. And so I think that's what we need to be paying attention to.
We'll have more with Steve Saretsky right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Steve Saretsky. Steve, where could we be heading in the real estate cycle?
Yeah, it's hard to say, really. I think, do I think that, detached single-family homes, particularly in the suburbs, which are up 30-35%, do I think it's a realistic scenario for those to have a correction, 10% next year? Maybe. I wouldn't be surprised. As of right now, at the end of the day, all you can do is look at the numbers and say, okay, in order for that to happen, you need months of inventory to get above 4. And you need to stay above 4 for minimum 4 to 5 months. As of right now, you're below 2. So you need months of inventory to double, and then you need to stay there for 4 to 5 months in order to see a reduction in prices. So until that happens, I really can't say that, there's an imminent correction around the corner. That's just what needs to happen. And so, we'll watch that. I think at the end of the day, bull market forever. Like I said at the beginning of the show, you've had 2 consecutive back-to-back years of record home sales. It won't continue forever. But again, until you get inventory back to a place where sellers are feeling compelled to lower their prices in order to get properties moved, you won't see a correction in the housing market.
Now, severe flooding has hit British Columbia in several places. The Fraser Valley hit the hardest, where we also had many communities in the interior cut off, and major highways also damaged. It may take months to get the Coquihalla up and running again, which was the twin, I guess, to the Trans-Canada for moving goods and services across British Columbia to the rest of Canada. Is the price of real estate likely to care about these flooding events?
It's way too soon to say. The fact that I haven't heard anything from anybody in the industry suggests to me that probably nothing's going on in regards to that right now. If I was getting phone calls from industry colleagues saying, hey, can't sell anything, prices are dropping, I'd probably be the first to know. I haven't heard that conversation. So, we'll continue to monitor it. But right now it's much too soon to draw conclusions. But that'd certainly be, you would think logically that, properties underwater in Abbotsford, might be taking a bit of a discount. But, as it stands right now, I'm not really hearing much of that.
Are you seeing any fallout from China's Evergrande crisis in the Vancouver real estate market?
No, I think it's kind of been a non-story, right? I think everybody kind of blew it up out of proportion. I had a lot of people inquiring about it. Like I said, at the end of the day, everyone's just speculating. Everyone's been talking about the China blow up for the last 15 years. It still hasn't happened. One day it will happen. But we're not really seeing anything there. All I can say is, the sort of Chinese buying activity, regardless of Evergrande, hasn't really been that active in Vancouver, throughout the pandemic. And for obvious reasons, you can't travel here for one. And so that's why we're seeing, like I mentioned throughout parts of the show, right? You look at the luxury housing market. It hasn't really moved. Hasn't moved in 5 years. So, despite, house prices in Chilliwack and Abbotsford and Surrey and Port Coquitlam, up 35%. The high-end luxury market on the west side of Vancouver, for example, hasn't really moved. So, that's because those guys, aren't really buying, certainly not to the extent that they were back, 5 years ago.
Steve, you put out what I thought was a brilliant tweet on Thursday. We've tried a foreign buyer's tax, empty homes tax, speculation tax, mortgage stress test, record new home completions, and yet house prices continue to push higher. We've tried everything but raise interest and mortgage rates. Imagine that. Is it the only solution politicians can ever think of is raising a tax of some kind?
Well, I think at the end of the day, a lot of these policies were brought in, taxes. They were almost brought in because I think they were brought in to not be effective, right? They're littered with loopholes. At the end of the day, I really think what drives the housing market the most is the cost of money. It's the cost of capital, right? It's, you got trillions and trillions of dollars, flowing through global markets, looking for places to park and earn a return. And in an era of zero interest rates, where you basically decimated and eliminated the bond market, which is the deepest segment of the financial market, you're naturally going to see more of that capital flowing into stocks, which are at all-time highs, real estate, all-time highs. And that's really what matters, right? And I don't think, obviously, we haven't raised interest rates for obvious reasons. First of all, probably the only thing that would actually work at bringing house prices lower. And that's not really an appetite that any sort of politician, as far as I'm aware, is actually willing to take on. And so, I think everybody's got this idea, well, just increase the taxes, as if, increasing tax revenues for the government, which is proven to be the most inefficient use of capital in terms of allocating it, Not only that, but I'd probably argue that they're largely responsible for, the current housing situation. I'm not sure that, increasing government tax revenues is somehow going to magically solve the housing market, but, we haven't quite figured that out yet. So, like I said, I think the biggest driver of house prices is ultimately the cost of capital.
Steve, how can people get your report?
Best way is probably just on the website there. It's stevesaretsky.com, and you can go and sign up there. It's all free. So, just a labor of love. Pump one of those out every single month. So, I think it's a pretty good resource on the Vancouver housing market. You're trying to get sort of a little bit micro with it.
Steve, thank you so much for chatting with us.
Yeah, thanks for having me on, Jim. Appreciate it.
My guest has been Steve Saretsky. He's a Vancouver-based realtor. You can find him online at stevesaretsky.com or on Twitter at Steve Saretsky. Our conversation took place on November 26th. If you have any questions for Steve or any of our other guests, you can send them to info@housestreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter at House Street. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HighEnd Radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HighEnd Radio is a production of House Street Media Incorporated.